Put out stuff, they said this is a catalyst moment. The catalyst moment came and went, no one cared, right? So you've got all the right stuff, but you need to tell people how you're putting it together. So what should they be focused on? You may have too many projects, I suspect you do. Are you looking to cash some of those in and offload some of them? Are you bringing strategic partners in? How do you bring more cash into the company now? Gold's gone up, your share price has gone down. What do you do?
What are we doing? We're doing an enormous amount of work in the next 6 months to understand and really pin down the development potential, economics, and permittability of this project.
Hello and welcome to Crux Investor. First of all, thank you very much for watching this video. If you like it, give us a thumbs up and do remember to leave your comments below. We will get back to absolutely everyone. And if you haven't already done so, please click the subscription button in the corner. And if you want to see more videos like this, click the notification bell. Today we spoke with Dan Wilton, who's the CEO of First Mining Gold in Canada. They've got a number of projects in Ontario, 8 to be exact. Their marquee project is Springpole, NPV of about 1.1 million. They are going to need to find about 800 million of capex to get that thing going. Waiting on permits, as most companies tend to have to do in Canada. We don't quite know how long that's going to take. Anyway, we discussed a number of different topics. Take a look in the description below. You can click on the relevant timestamp and that'll take you to that part of the video. Let's hear what Dan had to say. Hello, Dan. How are you, sir?
I'm well, thank you. I'm well. Thanks for having me here today.
Good, good. Now, I know you've hot-footed it back from BMO, Miami, in the sun.
Yeah.
Back up to base and then shortly off to PDAX, which is obviously going to be a very different experience for you. You excited about what PDAX is going to bring?
Oh, very excited. Having just kind of come back from Miami, I think the real takeaway that you get is, where we are as an industry, and you're starting to have the largest mining companies in the world talking about how, they're struggling to replace their reserves and they're going to need to find new projects and, add more productive capacity. So that all bodes well for a company that's holding, 6 projects in Canada with a total of about 11 million ounces of gold in them.
Well, okay, before you get into it, let's do a 1-minute summary of the total story there, and then we'll get into some of the details. So why don't you kick off and do that for us?
Yeah, so First Mining is a project developer that was originally put together in 2015, 2016 by Keith Neumeyer as kind of an acquisition strategy, and put this portfolio of gold projects together. 6 main projects are in Canada, 4 of them in the same area of northwestern Ontario. Total resource is about 11 million ounces of gold, and we're actively advancing 2 of our key projects. One of them is Springpole, which is a 5 million ounce open pit project that we're advancing through pre-feasibility, which we hope to have done by the end of the year, and getting our environmental impact statement completed and submitted early next year. And our Gold Lund project, where we're actively drilling right now, is 800,000 ounces of indicated, 875,000 ounces of inferred, and just off the highway between Dryden and Sioux Lookout. So we're actively growing and exploring what we think is a very impactful district.
Excellent. Well, thanks for that. Can we just kick off by talking about what the original plan was? Obviously, Keith Neumeyer, reasonably well-known guy, and you started off with a plan in mind. Is that still the plan, or have you had to evolve and change?
It's interesting. We hear a lot about that because the company was started in 2015, and originally, the original game plan was they were going to consolidate a bunch of exploration projects in Mexico, greenfields exploration projects. But at the time, and we all remember how difficult the mining industry was in 2015, they looked around and said, we can spend $30 or $40 an ounce exploring to try and find ounces. But you look in the market and you can buy ounces for less than $10 an ounce in these really good projects that a lot of people had given up on. And so, they raised a bit of money and used this company, First Mining Gold, to start acquiring projects with the theory of being a land bank. So the original strategy was, we'll acquire it, we'll do just kind of minimal holding costs, the environment will get better, and then we'll be able to monetize these projects, retain interests, hold on to royalties. things like that. And so they're very aggressive in the acquisition phase and bought 8 companies or projects in 12 months from 2015 to about mid-2016. And that really gave us the portfolio that we have today. And people really kind of bought into this mineral bank concept to the point that when they completed the last acquisition, the market cap of First Mining with the exact same portfolio that we have today was about 630 million Canadian. Today we're sitting having raised a bit more money, having done 40,000 meters of infill drilling at Goldland, having done 2 PEAs at Springpole, a really transformational metallurgical program to, I think, unlock a bunch of the recoveries. And we're trading at 150 million Canadian market cap, 4 years later. So continues for us to, come to the point that we think that there is real value in this portfolio.
See, why I'm asking this question, I just want to get an idea of what's going on in the minds of the management team. So, I do remember that period, 2012 through to 15, people were coming to us about giving them money to do this land banking, not just in mining, but also, oil and gas. And it was not something, I guess we're a little bit more conventional and couldn't really sort of see the upside there. But, some people were able to raise money. So you guys, that was the genesis of this, but you've had to pivot at some point. There was a realization that the market was not rewarding you as it once did. That must have been a big moment, big discussion.
Yeah, it was. And listen, that happened before I arrived. So it was really late 2017 as they finished up our previous PEA on Springpole that they came to realize, we're sitting with this world-class asset and we're not getting the value that we think we can get from it. There's been an enormous amount of work done already at that point, de-risking it, that we've continued doing. But the only way that you're really going to surface the value from this project is to get it permitted. And it's because Springpole sits under the deposit, sits under the bay of a lake. And the development plan is building a couple of small cofferdams and dewatering a bay of this lake, which all the technical and environmental data that we've compiled over 8 years says is entirely possible. So that sort of, they embarked on a strategy then and really kind of changed the message. In some senses, maybe a little bit too aggressively, changed the message that we are going to build Springpole.
Okay, so look, before we get into Springpole, we do have time to talk about it. So let's park that for now. I'm just kind of coming back to that moment. So what do you know? I know you weren't there, but you've been brought in for. When did you arrive? Actually, let's start with that.
So I started January 7th of last year. So I've been here just a little bit more than a year.
Okay, so in 17 they started seeing these changes in the markets. And they knew they had to do something different to be able to raise capital, to be able to survive in what the market was doing then, which is not a whole bunch of nothing, right? So you're sitting on these cheap assets. So do you know what were the options available?
Well, I think at the time the options are do nothing, just kind of hold and, wait for better environments. But the company had raised $27 million in 2016. And, even going through the due diligence in acquiring the assets, there were sort of opportunities identified that, whether it's at Goldland, firming up the resource or, hopefully adding to it. But certainly converting some of the inferred into indicated led to a 40,000 meter infill program that allowed us to really much better understand the deposit. Mm-hmm. And the company at the time was reasonably well funded to execute on a couple of these sizable plans. So they just kind of looked a little bit at the incremental risks and said, okay, well, we'll fund this program, we'll fund that program, just to try and answer some of the questions that investors and other potential partners would have about the project.
Yeah, okay. So, the cash is also a big driver of that. Either access to it or whatever you had left after your the various programs, though. So, okay. Well, let's talk about you. So, why did they bring you on board? What were you going to do for them?
Yeah, so I mean, my background prior to joining First Mining, I was one of the 3 executive partners at a private equity fund called Pacific Road Capital. And we had $800 million under management in 2 funds, investing in largely late stage mining projects around the world. And, they'd actually at Pacific Road looked at most of the projects in the First Mining portfolio before they bought them. But I hadn't really spent a lot of time, looking at First Mining as it came together, because it was the whole mineral bank strategy, which I thought was kind of interesting, but it was pretty aggressively promoted at the time, and lots of momentum as they build up this portfolio. But it was targeted away from, not exactly targeted toward institution. It was really targeted towards more of a retail audience. And so someone had said to me in 2018, after I left Pacific Road, you should really look at, some of these assets in First Mining. And I said, oh, okay, I'll have a look. So I did, and sure enough, recognized we'd looked at Springpole in 2013. We looked at Goldlund twice, down to drill databases and block models, like at a pretty good understanding. And we couldn't get deals done in 2013, 2014, sort of as the market's rolling over and valuation expectations hadn't quite adjusted yet. But I really like these projects. And so, come late 2018, my predecessor had left as CEO of First Mining, and someone said, oh, maybe you should talk to Keith. So I more or less cold called Keith. I didn't know him very well. I'd met him a couple of times, and said, I think this is the most interesting portfolio of gold projects sitting in a development company in the sector. And I think as much as you need a CEO, part of what you need is someone to help you manage this portfolio. So that's kind of what I saw. And then I joined early 2019. The first thing that we did was look at, inside this portfolio, what are the best risk return investments you can make to surface the most value. And as you look at everything you could do to the assets in this portfolio, whether it's drilling, whether it's doing economic studies, the single biggest driver of value, if you believe that you can get a permit for Springpole, and we do, the single biggest driver of value is getting a permit for that.
Okay. Again, we'll come on to that. I'm trying to get a sense of the management team here. So I get your background. I think I might have actually come across you as well. There seems to be a sort of a kind of where two C's meet moment here, where you've got a extremely, by your words, promotional team previously. Okay. I don't know why the former CFO left. But you're coming along with a much more institutional mindset. And I'm just sort of wondering, where it is today, because, you might, I'm looking at your share price, it's been falling away, and you're going to tell me it should be worth a lot more. And we can have that discussion as well. But, NPVs don't necessarily count for much, but, the market cap is the market cap, and the share price is the share price. So, do you think you have suffered from that legacy of being perceived as a promotional entity previously? I appreciate you telling me there's a fine line now, but you're now having to tell that story to the market, that actually you're bringing a bit more rigor and process into the company now.
Well, I think when you go back to the history and how the company was kind of put together, we're still the beneficiary of a lot of that, right? We have a lot of great long-term shareholders who bought into this idea and the value of this portfolio in 2015, 2016. And the other thing that a lot of people don't appreciate is that by buying all of these companies and projects, we actually provided a lot of liquidity to the shareholders of these other companies who were kind of stuck in 2015. And the one thing you can say when you look at our stock, it is nothing if not liquid. We still trade 1 million-ish shares a day in the TSX, and another 500,000 in the US. So we have this great base of shareholders who we kind of acquired or bought into the vision then. The challenge has been when things are aggressively promoted and they achieve certain values, in enthusiastic times. And with great enthusiasm, maintaining that enthusiasm as you get into like doing the real work can be hard sometimes. And so I think that's where we've had, people are sold a dream, and I think that dream and the value of this portfolio is absolutely intact. I think the way we're going to realize that value I think comes a bit more from, my background is fundamental value. I've spent my whole career trying to understand or, invest in fundamental value in mining.
Yeah. Okay. I'll take that as a yes. Fundamental value is a phrase that you use in your PowerPoint, actually, and it stuck out to me. And I know you have to throw the word potential in there, but what do you think is missing here in terms of the story? Because you look at the NPV, you look at the ASIC, well, I guess the one big number in there is obviously the capex number. You're going to have to find $850 million to kind of get this thing going here. Have you guys considered starting smaller? Have you guys considered other strategies which don't involve the need to go out and raise so much money for a $140 million company?
Yeah, and listen, we face this a lot on the concept of potential dilution. People talk about it. Listen, our strategy is advancing the value of this project, getting it through real value milestones and taking real risk out of it. And then in 2023, when we are having a discussion about is a single asset company the right one to build an $800 million project on their own, history has shown that to not be an entirely, universally constructive exercise. So at that point, then I think you have a bunch more options, but you should see the value of the project there. If this is one of very few 5 million ounce projects that in good jurisdictions, you get it permitted. There aren't that many projects in the world that can produce 400,000 ounces a year.
Yeah, but therein lies the problem. If you can get it permitted, it's sitting under a lake. Canada is a very good jurisdiction, mostly. But sometimes things take a little bit longer, and I do appreciate the size and scale of the Springpole project that you're talking about. And there's so much to like about it. But I say therein lies the problem of this single asset company, which you highlighted, which is if you have to wait around for that thing to be monetized in some way, or give you the bump in the share price, then you could be waiting an unquantifiable period of time. So what are you doing with the other asset, Goldland, for instance? Where's that at?
Yeah, so it's one thing when you look at this portfolio, you can draw a conclusion. This is not a single asset company. We've got a lot of really interesting projects, and in some senses, honestly, probably a few too many for us to spend.
Glad you said it, because I was getting there.
And that's no, exactly. And that's been the other part of the recognition that, as we've been setting capital budgets and priorities, getting our permits for Springpole, and in part of getting permits, it's getting the permission to mine and the social license to mine, and that's really important in us working with our Indigenous communities. And we're in early and active consultation there. So that's an important part of it. But, while that is going through a process, we have a lot of other projects, 5 other projects that we need to help surface value from. And from our perspective, listen, the market is moving. The gold industry is moving to a point where there is going to be a lot of capital needing to find homes to try and build productive capacity. People are going to need projects. We have some. So it's about getting the projects to the position where they are able to attract other capital, or attracting other capital now to get them ready for the time when the industry really
exactly. But the money controls that conversation. So you do have to put as many things in place as possible. You've got your PEA, PFS later this year, and hopefully EIA approvals first quarter next year. I get it. So you're moving that along, like everyone's got to do, right? It's the usual path. It's very clear. But what else are you going to be able to do? So you may have too many projects. I suspect you do. Are you looking to cash some of those in and offload some of them? Are you bringing strategic partners in? How do you bring more cash into the company now over the course of this year to allow you to do the things you're going to need to do to be able to have meaningful conversations with mid-tiers or large caps who are looking at a 5 million ounce scale operation?
Yeah, so I think we're executing on that right now. So we announced an earn-in deal on our Pickle Crow project in January with an Australian company called Ateco, which a lot of people don't appreciate if you haven't actually done the read-through, but it's the same team that was behind Bellevue Gold, which if you look at what they have done with Bellevue, this is the Australian Explorers of the Year last year. And they surfaced value in Bellevue by going into a past producing high-grade gold camp and applying, good state-of-the-art geoscience to delineate.
It's a great team. But what does that mean for you? What was the deal? Do you get cash?
So so the deal is it's not much cash up front. We'll get a few shares up front, and then they spend $10 million over the next 5 years to earn an 80% interest. We're carried through to a construction decision, which is pretty important in an underground mine where, that delineation of resource towards a mining decision is expensive. But what that project needed was, a focused team and probably $10 million to really outline the opportunity. The look-through value on that for us, if they have even a portion of the success that they had at Bellevue, which is now sitting at a 350 million Aussie market cap or something like that, we still own 20% of the project. We have $4 million of cash payments that would come in as part of the earn-in deal, and we'd own 10-ish% of the company.
Okay, so that's a kind of medium to longer term play, and assuming they hit all the targets that they need to hit and they can continue to fund this thing, that could be something for the future. What else is happening with any of the other assets like Hope Brook or Cameron, for instance?
Yeah, so, we spent, after we finished our financing in May of last year, we spent a little bit of time and a little bit of money trying to understand a proper game plan and look at a couple of the key risks on each of those projects, right?
Okay.
And so, as we looked at it, Cameron, I think, is a real sleeper in this portfolio. The reality is it was basically ready for production or ready for a feasibility. They did a feasibility study on it in the 80s, but there's a 240-meter ramp down. It's been developed into ore on 3 levels. And there's about a 30,000-ton bulk sample sitting on surface, like at the project right now. And it disappointed when they bulk sampled it on grade. So they thought they were going to get 5. They got kind of 3.5 grams. And it has never been identified as big enough to support its own mill. But what's happened from the 1980s to today is, someone's built a 25,000 ton per day mill 88 kilometers away. So we're thinking a little bit creatively about how that project could be moved forward. And at Hope Brook, similar, there's kind of 1 or 2 really interesting things that you need to understand about, potentially, could you be, starting, moving some waste rock and selling it as aggregate, for example, which some of the producers in northern Newfoundland are doing. You're right on Tidewater. You've got a power line right to site that's still energized. You've got, not ship loading facilities, but you've got a roll-on, roll-off barge facility that's still in great shape. And there's a almost 1 million ounce resource there. So it's kind of getting just enough information that you can understand what's a right way to put it forward, whether it's us or other people.
Right. Okay.
But we haven't been in an environment where you can sell these projects for cash, right? That environment, I think, is coming. So in order to get them ready for that, it's about finding partners who can help you move them to the position where they're then in the right state that you can maximize the value for them.
Okay. Well, at least you're answering. I do feel the whole way through this, you're being quite straight with me. So you're talking and thinking about ways to monetize the non-core projects. You've got one which you've done a, what did you call it? Not a joint venture.
An earn-in
deal. Which may have some monetization component to it at some point ongoing. But today they're not going to help you move the main story, forward with Springpole or Goldland. And I think that's what shareholders and certainly some of the viewers have contacted us are keen for you to start communicating to them. How exactly does this path what are the points in this path forward that are going to allow them to, they're underwater, get back to where they were, stay around for the upside, hopefully, and and stop the rot, as it were, because you've got all the right stuff, but you need to tell people how you're putting it together. So what should they be focused on? Now we're very clear about the 6 kind of non-core assets where they're at. What are you doing on the Goldland and Springpole to maximize that shareholder value?
Yes, so sort of as we talked about, Goldland we're drilling right now, and I think we've, through our drill program last year, identified at the Miller target, which is kind of 10 kilometers away from the Goldland main zone, had some of the better open pit drill results in Canada last year. Just the challenge with Goldland is that it sort of, like everything in our portfolio, gets overshadowed by Springpole. And so it's difficult to get people to pay attention. When you get them to pay attention to, 800,000 ounces at almost 2 grams of an indicated resource and another 870,000 ounces of inferred at 1.5, that falls into an open pit with a sub 6-to-1 strip ratio located just off the highway, we need to do a better job of highlighting the value of that, but it's still wide open to continue to grow. But my concern, to be honest, is we can put out great drill results. We put out 40 meters of 4 grams in an open pit target 80 meters down last year, and no one cared. Like, we put out 150 meters of 1.5 grams.
So what are you going to do?
10 kilometers from our main deposit.
But tell me what you're going to do about that. That was the same for a lot of people. They put out stuff. They said this is a catalyst moment. The catalyst moment came and went. No one cared, right? So what do you do this year? You're not a producer. Those are the people who are seeing the uplift and the benefit of the gold price today. Gold's gone up. Your share price has gone down. What do you do?
So listen, first of all, we are raising the capital to make sure that we're funded to get there. And we announced that we were raising $5 million. We're going to have a second close on that tomorrow, which will be larger than that. And what we've found is, for all that we talk about, there are a number of shareholders who are disappointed. We have a number of great long-term committed shareholders. And I think when people look at how those shareholders have shown up to support us here, I mean, it's been amazing for me and humbling that, there is still a really great core group who are supporting us moving forward. So that gives us a sense of, we have the capital we need to move the project, particularly Springpole, through some of these catalysts, but you have to find other ways to do it, right? And part of that, our partnership with Ausenco, who's doing our pre-feasibility study, all for shares, which is, pretty, a pretty unique structure. But, we're delighted to have that kind of partnership with what I think is the best engineering group we could be working with on this size and scale.
Okay, so let's come back to these raises, because you did one beginning of February, 14th February, and you're doing the second half of that now. Is that what you're saying?
Oh, it's all been kind of being pulled together over the course of the last week.
So that's a total of five plus.
It will end up being, it'll be larger than that.
A little bit more than that. Okay, great. So I guess what people want to hear is that that's not for G&A and that's not for directors' salaries. They want to hear what you're going to do with that money, which is going to generate, dollar for dollar, more than that.
Yeah. Well, listen, this all comes down to what I think is pretty simple math. So as a corporate finance guy for 20 years and a private equity guy for 5 years, if you look across the cycles, if you get, a project permitted that's of the size and scale that Springpole is, that project with permits should trade at somewhere around 0.5 times its net asset value. So Springpole today, that's $841 million at a $1,300 gold price. That's 1.2 billion US at a $1,500 gold price. And, everyone used to kind of wring their hands when we'd talk about 1,500. Does the project need 1,500? No, it doesn't. But in the environment we're in, if we're talking about a $1,500 gold price and a 75 cent Canadian dollar, this project is really, really robust. And so, to surface that value by getting the permit gets you, I think, a real opportunity at what is a multiple of our current share price, re-rating to get there. Now, it's a lot of work, and there's still a lot of time to that. But getting this PFS done, that takes, I think, a real demonstration of the technical risk out of it. Getting our environmental impact statement submitted, which we're aiming to do next year, that kicks off what in Ontario has been a pretty reliable 2-year process. So Ontario has permitted 3 big open pit mines in the last 3 years: Cote Lake, Hard Rock, and Magino. All of them, 10 to 35,000 ton per day open pit mines around a lot of water, because there's a lot of water everywhere in Ontario. So when we get that permit and get the project through that de-risking phase, and I don't think it's, you get no credit for it and then they hand you the permit and all of a sudden it goes up 4 times. You tend to, as you demonstrate that you are moving the project forward, you tend to see that value accrete.
Talk to me about that, because I'm fascinated by that, because there's a line of logic here which says don't invest anything until there's certainty, and that's the permit has been, 1, submitted. There's some level of certainty that you've got to a point where you think you can get it through, and then 2, the other permits are awarded. Okay, and that's some time away. But right now you've got okay, you're trading, but it's trading down. Okay, so you've got a million shares or so. That's great, but it could be a whole bunch better. So what do you do between now and then to say, look, we're going through the process of putting the permitting documentation together, but here's what we can tell you between now and then to give people some comfort that you guys are going to be able to get this thing over the line, because otherwise people just sit back and wait, and that's not good for you, especially when you're raising money. That's expensive money, right?
It is, and we are at the most difficult point of projects to raise money right now. This is unprecedented in my career, where you can find exploration stories with no resource and 2 drill holes that will attract 3 times our market cap, because everyone's looking for something new, which is great, but it's irrational. So what's going to solve this over time? And it all comes back to, what the titans of the industry are saying about peak gold and about how they don't have any projects. Listen, when your senior gold producers are trading at 2 times their net asset value, and they're generating, 2 to 2.5 times the free cash flow that they were 3 quarters ago. Yeah. Because the gold price has gone up, unprecedented free cash flow and, high trading multiples. When they go to look for where those projects are, and it's not us specifically, but developers generally are trading at 0.1 to 0.2 times your net asset value. So what closes that gap? Yeah. You start seeing partnerships again. You start seeing investments by, intermediate and large cap gold producers, and you start seeing M&A deals. And that's what is going to compress that and get, back to the rational metrics, which are these projects should trade at 0.5 times NAV, up to 0.7 times NAV, and get acquired at 1 times NAV by producers trading at 1.5 to 2.
I hear you, and again, you're talking my language. I get it, but you're towards the end. You're talking towards 2021, that sort of time frame. I'm talking about now for the rest of 2020. What are you going to be talking to the market about? I know you can't talk about conversations that you may be having with strategics, etc., or M&A, or any of that kind of good stuff. You're going to have to be like, here's what we're doing on a quarter by quarter basis, which is helping bring certainty to those conversations that we're going to have with those strategics. Yeah. What are you going to do?
So listen, there's the challenges you've exactly hit on is that there's only so much that you can talk about when you're going through a pre-feasibility study, right? So what are we doing? We're doing an enormous amount of work in the next 6 months to understand and really pin down the development potential, economics, and permittability of this project. And so that's exciting things like hydrogeology and hydrology and waste rock characterization and tailings and ongoing metallurgy. So I think we can talk about some of the milestones and test work of those things that are coming out, not draw conclusions, because the conclusions get drawn in a PFS at the end of the year and in your environmental impact statement. But until then, we can keep in dialogue with our Indigenous communities and in consultation, and we can do everything that we can do to move the project forward. And that might be having discussions with partners. It might be finding a longer term source of financing. It it might be giving people some degree of hope that the company is not just a perpetual dilution machine, which we hear a lot and is one of the concerns. But we're in that point where, there is a natural wait and see tendency, and you've absolutely hit the nail on the head. But one of the things with having all the other sort of opportunities and leverage in the value of these other projects in our pipeline is that we hope that there will be a bunch of other catalysts, whether, it's our partners at Atico who are putting out, new drill results at Pickle Crow, or putting out a new resource at Pickle Crow, demonstrating that, there is value in these projects and we're going to be able to surface meaningful value. Yeah, it might not be in 2020, but I think with this financing getting closed, we're going to have enough money and line of sight and runway to demonstrate we can get to some of these real value.
Okay, so the money you're raising now is going to get you through to when? Q1 21?
The money we're raising now, and we'll see sort of what the final number is, but the goal is that gets us through to the end of this year. And then again, we're talking about if there is some other sources of financing we can sort of put on top of that with a longer time horizon to see us through. Ultimately, listen, where I would like to get to is to be able to say this company is funded to get Springpole from where we are today to, our EA approvals in hand, which is 2023 by our timeframes right now. So the challenge with this portfolio is that there are G&A costs and there are holding costs of 6 projects. Some of which you can offset by doing asset deals like we have done at Pickle Crow. So that takes all of the cost and we bring a partner in to help us do that.
Okay.
So there's lots of different ways that I think we can look at that, and it's not all just dilution, right? So we're actively in discussions with a bunch of other sources of capital that might look more at the project.
I think that's what people need to hear, because, like I say, you got 8 assets for crying out loud. There's a lot of cost, it's a lot of time, effort, distraction, etc. You know what your number 1 asset is, you know what your number 2 asset is, and I think people want you to say stop this dilutory machine that the phrase that you used a second ago, and give them a sense, an idea of how you're going to stop that from happening. And because once you've done a PFS, guess what happens next? We need an FS, we need a DFS, so it keeps going. And it's a question of, again, people want to know, are you going to be financing that, or is that the time to bring in strategic partners to help you with that? And those are the sorts of clues I think people are looking for. Certainly.
Yeah, and I will tell you that the discussions we are having with potential strategic partners today are markedly different than the discussions we had a year ago, right? They've just come from, a great forum to have a bunch of those discussions. And the world is changing. And what a lot of people don't appreciate, investors particularly, they don't appreciate that the free cash flow to the gold sector in the last 6 months has doubled, right? You work on the assumption all-in sustaining cost in the sector is about $1,000 an ounce. We were trading at $1,250, and the gold price was trading at $1,250, and the gold price goes up to $1,500. That doubles the free cash flow to the sector. But we've only had that for 2 quarters.
Exactly.
Right? In the first quarter, no one believes it, and in the second quarter, they're still kind of setting their budgets for next year. But money is pouring into the coffers of producers right now. And at the same time, just watch the year-end results announcements from all of them. They're talking about reserve reductions. They're talking about not having been able to replace the reserves because of 8 years of, systemic and systematic underinvestment in productive capacity or exploration or development or whatever. So yeah,
I get it. I mean, that is well-told story, well-trodden, story. Again, it comes back to what you, because I see so much right with this, and I do appreciate your honesty and forthrightness about what you've got and what you're trying to do. So I do like that. What I'm not hearing yet, but you're telling me it's coming, is how you're going to explain how you get a seat at the table when these newly moneyed up producers, because the gold price has been, as you say, only for 2 quarters. Let's remember that. You know, producing cash where perhaps they were once struggling, and there's a few of the big boys have struggled until recently. Let's be clear, right? This is they need this to continue just to make right some of the wrongs of the past couple of years, quite frankly. But assuming some of them do come to the table, like some of these Australian guys who are cashed up, how do you get them to listen to you? We've heard some fantastic South American stories, you know, some other Canadian stories. It's a very competitive environment. You are sitting on a lot of ounces, but so are a lot of other people. So how do you get to the front of the queue?
Well, listen, I think much as I'd like to say it's, you know, my charm and ability to tell a story, it's not. It's the fact that we have a great portfolio of projects. And when you look around the world, let alone in Canada, but look around the world and where you can scope out projects capable of producing in excess of 400,000 ounces a year, that is a very small list. And when you look at those projects, and then there's a calculation I would encourage you to look at and encourage investors to look at, what's the percentage of the capital? So how many of those could you conceivably build for less than $1 billion? The answer is almost none. And in those other projects of this size and scale, what's the infrastructure build requirement to get there? So everyone looks at Springpole because we don't have a road up to the project today and says, oh, it's remote. We are 30 kilometers from a class 1 logging road that I drove last week. And we're 30 kilometers from a power line. Like, the actual infrastructure component of this is minimal relative to the size and scale of the operation. But listen, it has its own challenges, and the challenges are that the deposit sits under the bay of a lake. But you know what's been known since they discovered it? It's been known that it sits under the bay of a lake, and there's been an enormous amount of environmental baseline work done, like 8 years of environmental baseline work, and a 380-page report, that the conclusion of which is there's no species at risk, and there's no unique fish habitat here that can't be compensated for. So that, you know, I think in the end, anyone who has not looked at this project in 8 years, which is most of the world, when they come back to see all of the work that has been done and the money that's been spent to understand the key risks, they actually really get it. So that's where I think we can have, you know, a different discussion around, you know, jurisdictionally, if you're going to try and pick 1 or 2 projects that you're going to back, you know, do you want a project that's at 5,000 meters in the Andes that needs a desal plant on the coast and a pipeline? Or do you want a project 100 kilometers east of Red Lake just off a logging road? Dan, thanks very much. And I'm just sort of running out of time here, but I do appreciate you running through that story with us. Like I say, there's lots to like. I want to hear more from you, definitely, because there sounds like some good things coming up this year. And you know, I wish you well for PDAC next week. Well, thank you very much. It's going to be a busy time for sure. We're at a really interesting time in the industry, so we're all pretty excited.
Yeah. Okay. Well, thank you very much for your time. We'll speak to you again soon.
Okay, great. Thanks very much.